See. And why is it necessary for the Indonesian government to support that currency?
Yeah, they can let it go in theory, yes, but I don't think it will help. It will make matters probably worse, because as the currency goes down, people will just take the money out. And then they have a lot of foreign debts denominated in dollars. So if the currency collapses, they have another debt crisis. So, I mean, I think the situation actually could be quite bad in Indonesia. And don't forget, Indonesia is no longer a big oil exporter. They actually import oil.
I saw data in Bloomberg that shows the what they call the fund outflow, and year to date it has the least fund outflow.
Yeah, but that doesn't mean that it won't have the most outflows in the next 3 months.
So that could correct itself.
Yes, yes. I mentioned at the beginning of this discussion, this domino, that one falls after the other. That's why I turned bearish about commodities early in the year, because I saw stocks going down. I thought this is going to spill over into something else. It's not just that stocks go down and commodities continue to go up. At some stage, demand weakens and then they perform badly. And it's like a friend of mine, he's an art dealer. He keeps on telling me that that the art market has bypassed the other declining asset price. I tell him, don't base your appraisal of or estimate of the art market on the Damien Hirst auction. Damien Hirst is this very big artist who just sold recently $200 million worth of his work at a relatively high price. The rest of the market has gone dead. Dead. And the Russian oligarchs, they're now all have less money, period, or no money. So before they go and buy jewelry for their mistresses, they'll think twice.
Yeah. Sir, in the Philippines, it's supposed to, has given up its target of balancing the budget this year, and now they're going to do that probably in 2010. The strategy is to make government spend and hopefully mitigate or soften the impact of this global slowdown. But you've mentioned a scenario, the credit, a cycle of credit growth slowing down. The private sector will be more strict with giving out credit. Wouldn't that strategy of spending more, so basically government borrowing and letting the deficit will actually penalize the Philippines in this period of slowing credit growth and stricter credit standards?
Yeah, I think that the Philippines will also obviously suffer. There's no question to my mind. Now, to what extent it will suffer more or less than the others, that is difficult for me to judge. But I think that just looking, since I visit the Philippines every year, we have a very cyclical economy in the Philippines that has some similarities to Latin American economies, more so than maybe to the typical Asian economy. And you always have here a boom in something and then a colossal bust. That is the pattern of the Philippines. And in my view, the Philippines has failed to build up, first-class infrastructure. And capital spending is relatively small in comparison to the economy. What has transformed the Philippine economy to some extent for the better in the last 5-6 years is the emergence of a relatively large IT industry, IT services. And I think that has or can lead to, say, a broadening of the middle class. I think that is the positive aspect I see about this. But don't forget, also IT is a cyclical industry. Long term, probably a growth industry. There's also a lot of competition. I mean, every country wants to have IT centers and software service centers and so forth.
Call centers.
Yes,
Yeah.
exactly, yes. But I think there, the Philippines, they can, they at least were able to provide jobs for people and jobs that before didn't exist. You know, that is the positive aspect of that. And since these services require some level of education, it then enlarges, say, the lower middle class to middle class.
I see. Okay. So, having said all this, should one stay out of the markets now? Stay away?
You know, this is a very difficult question, because if someone has already 100% of his money in equities, then my advice would be to reduce positions. But if someone has 100% in cash, no properties, nothing at all, I would tell him, look, for sure, today is a better chance to buy equities than a year ago, because they're down 50% in value. Now, can they go down another 50%? Yeah, possibly. But nobody will buy the day every market bottoms and sell out the day everything peaks out. And so, and in absence of knowing how the world will look like in a year's time, and I mentioned to you that the rules of the games are changing now all the time because of the central banks and treasury departments and so forth. In absence of knowing how the world looks like, all I can tell you is I would be diversified. And I would also consider the following. To own cash has also some risk. First of all, the return on cash is lower than the rate of inflation. But B, if I deposit $1 million in a bank, I'm not sure the bank will survive. You know, I'm not sure. If I own $1 million in gold coins in a safe deposit box, I regard this as cash that is relatively safe, because it's cash that nobody owes me. If I have a deposit with the bank owes me the money. So there's some risk. If I own shares in Ayala and say in San Miguel or food companies, the whole world may collapse. If these companies survive, and if you select companies that are conservatively run, I mean, the Ayalas, they have survived hundreds of different Philippine governments.
Yes.
And so forth. So the likelihood, the probability that they will survive is relatively high. So okay, you own shares in Ayala, they can go down 50% from here or 90% if the whole world collapses, but you still own the shares, the same quantity of shares. And so to own shares in some cases entails maybe less risk than to own cash, you know. So my advice to individuals is to be diversified and to reduce leverage, you know, not to have large borrowings and sleep at night. If you have no borrowings, let's say I buy a house and I pay cash for it, $1 million. It doesn't change my lifestyle if the house is $2 million worth or $500,000 worth. It's still the same house I'm in. The lifestyle change comes if I borrow 90% against the purchase price. So instead of paying $1 million for a house, I borrow 900,000, put down 100,000. The house goes down to 500. I'm now minus 500 equity, minus 400 equity.